I wanted to have a quick look at markets. Lots been happening this week, lots with AI, lots with markets. It's been a busy week looking at the news cycle. Lots on the scoreboard. The FTSE 100 touched a record intraday high. The index, with none of the big tech chip makers, none of the stuff that we normally talk about, hit mega highs, probably because it had none of the above. Across the water, the Nasdaq 100 closed in correction on Wednesday, down more than 11% from its June peak. I know it's been bouncing around a lot, so at time of pod, who knows what's going on. The SOX, which is the semiconductor index, was in bear market, 25% off its June high. The Dow rallied 500 points, but that was an interesting rotation. Then we saw earnings from Amazon, Apple, Microsoft, and Meta. Mads, I'm going to come to you for all the good stuff and the meat and potatoes there. SK Hynix took another punch, and half of Korea's index went with it, and then everything seemed to bounce a bit yesterday. And the one that really caught my eye was CXMT. So they are the memory maker in China. They listed in Shanghai, and they hit 466% on debut, nearly $500 billion more than Intel, and the retail tranche was 212 times oversubscribed. Now, if memory serves, they're a 10-year-old chip company. This is the biggest listing since the agricultural bank listing in China in 2010, and they have about 7.5% of the global DRAM market, the memory market. But looking behind at their tech, this is DUV stuff, not the EUV, like the super clever ASML tech. So this is nothing like mega complex or game-changing litho or tech-wise. But Mads, fill in some of the gaps on what's happening in market world. And I'm particularly, if you have any notes, I'm particularly intrigued by the CXMT, why that was such a mega hit. But over to you.
We'll cover that. Let's get to China towards the end. I mean, I think the big news this week is that 5 of the big AI spenders, they've been reporting here over the last week. We've had Alphabet, we've had Microsoft, we've had Meta, we've had Amazon, and then we also have Apple, which is sort of connected to all of it in some way, which we may come back to. And, you know, these companies generally, maybe except for Apple, spend enormous money on AI and AI hardware. So, and that's what generally the report said, more money is being spent, yet they did report and did act and sort of react from market's perspective very differently. You'll forget what happened on the day. If you look at what happened in the year, Microsoft, they jumped on good earnings and good news, especially around bookings. Meta is down. They were down and they're down for the year. Apple is the one that's doing best, but only just. They're up 15% for the year, but Amazon is right behind, fueled by some very bullish comments from Jassy. He actually came out last night, not in the printed remarks, but in the sort of the spoken earnings call, and said that he thought AWS could become, hold your horses, $1 trillion business. Now think about that, $1 trillion of revenue from cloud services. And of course, a lot of that is AI powered. So if we're talking about whether all the AI capex will result in real revenue, well, Andy, he's certainly confident that it will. Should we talk a little bit about the CXMT?
But I mean, it just feels like that people are still, or some are still being a little bit punished, even though earnings are looking good. And I'm assuming the whole free cash flow is still a challenge. Meta spending lots. So is that a fair assessment?
Yeah, Meta's business model right now is still mainly benefiting their own business, which, to be fair, they've done extremely well. Maybe one of the best in terms of turning AI into real profit for their business. How do they do that? Optimizing the way they serve ads, they optimize their platform and everything else. They're really good at using AI, not so good at selling AI to others, and haven't really figured out a business model yet, spending like, you know, kings and emperors on AI hardware. So markets have some questions there. Whereas others, you know, Microsoft, we saw coming out with a phenomenal backlog, you know, basically saying, look, we have booked, you know, revenue as far as the eye can see. I still think if you compare them to Google, I think they're getting maybe a little bit more credit than they should, and Google maybe a little bit less. Why is that? Well, if you look at Microsoft, yes, they have a phenomenal backlog. They've got a formidable enterprise sales force, possibly the best in the world. And they've been incredible at converting all the AI excitement into long contracts with enterprise customers, of which they have a lot. But if you think about what they sell, well, they resell other people's stuff. They resell other people's models. They resell GPUs from NVIDIA. right? And that will impact their margin. Now look at what Google does, making their own models, making their own TPUs. Ultimately, this should result in much better margins. And so of the two, that's still the one I'm more excited about. But look, as we always say, distribution is destiny. If you have the right sales force, that can sometimes trump having the better technology. And Microsoft's enterprise sales force is formidable.
Yeah. No, I do dig into CXMT. I'd not heard much about them until this kind of mega debut. So dig into that one a little bit for us.
Listen, everybody's been talking memory for the last year, and there's been great money to be made if you got in early, not even early, but a year ago in SK Hynix and Samsung and in Micron. Now the Chinese, they want in on the action, and CXMT is there. And so it's kind of a local memory champion. It was founded in 2016, so not an old company, stayed back from the start. They listed in Shanghai on Monday, and they've closed up 466%, so nearly a 5x. And so you do wonder whether kind of the bankers that priced that, whether they got the price slightly wrong. It was the biggest mainland chip listing ever. They raised $8.5 billion, which used to sound like a lot of money, but today with today's $1 trillion IPOs, I don't know, in terms of valuation, it was valued at 1,600 times earnings, right?
So many questions.
Which is nuts. Now here's the catch. Everybody's excited by memory because AI. That's not the stuff these guys make. They make the good old school DRAM you need in your laptops. Okay? So it's not even that it's a high bandwidth memory maker. Now, everybody's expecting that they will be making it, but HBM, high bandwidth memory, the AI memory, is not even in their business plans today. It's certainly not in production. They have a share that doesn't really register. They are several generations behind the South Koreans. So there are a lot of questions around that. Now, here may be attempts at some answers, or at least, connecting some dots. Only a tenth of the stock actually floated. So 90% is still locked up. And you have capital controls in China. You have a lot of people sitting in the domestic market wanting to do more AI trades, getting in on some of the exciting things, not able to buy Hynix, not able to buy Samsung today, seeing a local memory maker list. And I think you've actually seen quite a lot of retail money.
Yes.
You float into this stock and bidding it up. So that possibly explains why the numbers just look as wacky as they do.
And I'm assuming, obviously, property was the big home run, the big winner in China for a long time. So I'm assuming there's a rotation piece in there as well.
You would have thought that, HBM, I know it's not in their immediate business plans, Mads, but people, maybe some of the smarter traders in there, probably not at the top of the range of that price, but are certainly making a bet that the company does figure out high bandwidth memory at some point and does start to join the AI race, and becomes China's
100%.
I thought they did make high bandwidth memory. I thought they did.
If they do, it's such a small proportion as to barely register in the numbers today.
Yeah. Lots of future focused bets.
I think 8-9 million users. So they've got a lot of catching up to do, basically, and they'll probably get there. But Starlink remains way ahead. There's also another interesting player, actually, sort of taking a different approach, which is AST Space Mobile, and they actually work with all existing 4 and 5G phones. And what they do is have an enormous phased array antenna which unfolds. It's about the size of a tennis court, which means they can actually pick up the signals from regular mobile handsets. So there are other players entering the space taking a different approach, which I think is very interesting. The link up with Apple may be a little bit of a red herring, because Apple's service is currently all around sort of backup redundancy, emergency contact messaging, SOS, rather than the high bandwidth which Starlink is allowed to offer. And ultimately, more satellites means more users, means more capacity, means more bandwidth. So Starlink's still way ahead, and it's going to take a while for him to catch up.
It feels like there is a mobile push, because I saw this. Elon is trying to buy terrestrial frequency, and now we're talking about Amazon and iPhones from space. It just feels like there is. I wonder what impact that will have on 6G and other terrestrial networks. It feels like there's something brewing there that I imagine we'll come back to in weeks to come. That'd be a really interesting. I mean, imagine getting service anywhere. I mean, I don't even get service at my house. I mean, just imagine being. I guess that's where we will end up is a full network coverage from space.
There'll be no escape. There'll be no escape.
Well, maybe it's no bad thing. I mean, I saw that Apple are basically enabling text messaging through their satellite service. I don't know who's running that behind the scenes, which is beyond just the SOS. I'm stuck in a mountain somewhere. Lomax, situational awareness, another story. I know it's slightly adjacent to Marcus, but another story. What's happening with situational awareness, the hedge fund?
Well, you probably read in the news this week, there's been a big kerfuffle and shakeout at Situational Awareness, which, as a reminder, is this hedge fund founded by a 24-year-old German wunderkid, supposedly, who after graduating quickly found his way via FTX, maybe Red Flag, to OpenAI, where he worked and perhaps infamously now, published a long 167 page essay in 2024 extolling the virtues of AI and how, we're in this AI super cycle. And so we should be investing in data centers, compute, memory, as well as obviously the application layer and et cetera. I mean, you could just say duh, but anyway, at least at the time, he raised, as a 25-year-old with no prior investing experience, ended up being seeded by the Collinson brothers and by a few other members of Silicon Valley royalty to build a hedge fund to execute against this thesis, predominantly in the public markets, although he does have private markets exposure to Anthropic. AUM at the hedge fund grew to 1.45 billion. At last count, it was like 25 billion. He was taking highly leveraged long bets on AI stocks and shorting traditional old school, SaaS companies, basically betting on the SaaS apocalypse, etc. It all came a bit unstuck in the last week. It was going great until the end of June. He was up over 400% until
H1 was bumper, right?
Great. But it's all come. The wheels have slightly come off with what's been going on in these memory stocks.